Hello everyone, my name is Romeo Razi, CPA, and I used to work at the IRS. In case you haven't been paying attention, Congress passed a brand new tax reform bill called the One Big Beautiful Bill, which is now the One Big Beautiful Act. And there are a whole lot of changes to the tax code. Now, it doesn't matter if you like Donald Trump or you hate Donald Trump, we now have to deal with it. So I'm going to tell you the 9 things you need to know that have changed that will help you with your taxes now that they've made the One Big Beautiful Bill a law. The first one that we're going to talk about is the Tax, Jobs, and Cuts Act that they made permanent. Donald Trump first became president, he created a tax law that cut a bunch of taxes in 2017. And now a bunch of those things are permanent. So you get a higher standard deduction, you get less tax brackets, you get the child tax credit, and the most important, if you own a business, is something called the 20% qualified small business deduction. And if you own an LLC or an S Corp, or you're a sole proprietor, or you're a side hustler, you get that deduction. Now, check with your CPA because some of those deductions are limited. Like if you're in personal services, like a lawyer or a doctor or an accountant like me, sometimes you don't get the deduction. So you better look into that with your accountant. Number 2 is something called the SALT deduction. And I don't mean salt like, no, it's an acronym because the government loves acronyms. And SALT stands for state and local tax deduction. Now, before Donald Trump became president, a bunch of blue high tax states, they would get subsidized by the IRS. And the way they would get subsidized was because every dollar you paid to California or New York or New Jersey or any of these other states, you would get a dollar deduction on your taxes, and it was called SALT. But in 2017, what Donald Trump did with the Tax Cuts and Jobs Act was he went and limited that deduction $10,000. And a bunch of people in those states were mad. They were so mad that those people moved. They moved to states like Nevada and Texas. But now, part of the One Big Beautiful Bill, they've raised that limit from $10,000 to $40,000. So now, if you live in one of those states, like California, New York, New Jersey, Maryland, Virginia, now you're gonna get a bigger deduction come April 15th. The third thing that changed in the One Big Beautiful Bill was tax on tips and overtime. Now, if you live in Vegas, you are so happy because the first $25,000 you make in tips are gonna be tax-free. And people in Vegas are popping bottles. One of the things you gotta know is that you're only tax-free if you make under $150,000. And the second thing you gotta know is only income tax. You still gotta pay taxes for Social Security and Medicare, which are commonly called payroll taxes. And with overtime, if you're an hourly worker and you work overtime, the first $12,500 is also income tax free. So right now, people in Vegas are popping bottles. They're so happy. The fourth thing that changed because of the One Big Beautiful Bill is 1099. You are going to be so thrilled. Now, normally when you're an independent contractor, the one number that you love to hate is the number 600. And the reason for that is when someone would come to you and pay you for your services, they paid you over $600, they would come to you and say, hey, give me your Social Security number so I can give you a 1099. But now the new threshold is $2,000. So this is gonna make a lot of you super, super happy. Because instead of loving to hate the number 600, you're gonna love to hate the number 2000. and everyone loves it. You love it because you're gonna get less 1099s, and I love it because that way I don't have to prepare as many 1099s. And the other thing that I know a bunch of you were worried about were Venmo and Cash App and PayPal. And that limit isn't $2,000, that limit is $20,000, which means you're probably not gonna get any 1099 for those unless you got a really big business. So everybody's super happy. The fifth thing that's changed in the One Big Beautiful Act is the automobile interest deduction. Now what that is you can now deduct up to $10,000 in interest you pay on your car. But there are certain rules you gotta worry about. The first rule is it's gotta be a brand new car, okay? It can't be a used car. The second thing is it's gotta be a new automobile you buy after the act goes into place. And the third thing is you have to make under $100,000. So if you make under 100K and it's a new car and it's your personal car, up to $10,000 is a deduction. Now what I want to talk to you about, the sixth thing that's changed because of the One Big Beautiful Bill is a deduction for seniors. Now, Donald Trump promised there'd be no tax on Social Security, but most people already don't pay tax on Social Security. In fact, if the only income you have is Social Security, you never pay tax on it. But if you got Social Security and you made other money, you would have to pay tax on it. So Donald Trump couldn't get rid of all tax on Social Security. So what he did was he added a special deduction for seniors that if you're a senior and you make under $75,000, you're gonna get an extra $6,000 deduction. So that would make a lot of people did have tax on Social Security not have it. So yay for them. Now what I'm gonna do is go over a bunch of business deductions that are really important that you should know. Number 7 is 100% bonus depreciation. Now, before the great financial collapse that happened in 2008, when you would put an asset in your business like equipment or an improvement or you buy software, you couldn't write it off. You would have to write it off over many, many years. And when you write it off over many, many years, it's not called a deduction, it's called depreciation because you can't do it all at once. But during the 2008 financial collapse, they decided they wanted to give a bunch of people help, and they created something called bonus depreciation, which meant you could write it all off at once. And the way they made it was that in the first year, you would get to deduct 100%. But they realized that was too much of a gift. So they said the second year, if you put a new asset in service, you only get to deduct and write off 80%. And the rest of it, you have to depreciate over many years. And then it was going to be 60% and 40%. And what happened was Congress would keep patching this. It would go down to 80%. And then they'd say, no, bring back 100% bonus depreciation. And now, part of the One Big Beautiful Act, they made 100% bonus depreciation permanent. That means if you go and buy some equipment or put a big improvement in your building or you buy software, you can now write it all off using bonus depreciation. The last two things I'm going to talk to you guys about are super, super helpful people in tech. The first one, which is number 8, is called the R&D expense deduction. Now, one of the laws that had changed before was they made it so if you do R&D, you're not allowed to write it off. You have to amortize it, which is another word for depreciation, is you have to amortize it over 5 years. And so what happened was if you were a startup or a company that was big in software and you were making money and a lot of your expenses had to go into R&D, even though all the cash would go out for the programmers and the hardware, what would end up happening is you would have to amortize it over 5 years and you'd end up paying tax. Well, a bunch of startup people were complaining that they had no money and they kept paying money to the government in tax. tax. And this was a big deal for both Republicans and Democrats. So they fixed it and made it so R&D expenses are now completely deductible and a write-off. Not only that, they've made it so if you did amortize it over the last few years, you can go back and amend your tax return and get your tax dollars back. Right now, startup founders and startup people are lit. They are popping not bottles. They pop other things in Silicon Valley, which I don't want to talk about, but if you know, you know. Now, the last thing that changed that I want to tell you guys about is something called the Qualified Small Business Stock Exclusion. And this is another thing that tech people and startup angel people love and are super happy. Now, there was a lot of fear that they were going to get rid of this thing, and instead of getting rid of it, they made it bigger and better. So, if you create a brand new company and it's a C corporation and you get stock, the assets of this C corporation are $50 million or less when you get the stock, that stock qualifies for an exclusion called the Qualified Small Business Stock Exclusion. And if you've held the stock for at least 5 years, when you sell the stock, the first $10 million you make is tax-free. But what they did was they changed it so now not only is it 10 million, they've raised the number to 15 million. And the asset threshold for your company is not 50 million, it's 75 million. And both of these things are indexed for inflation. So the people this is going to help are going to be startups, angel investors, employees that get stock options and ISOs when they start working for a startup. These startup tech people are super happy and thrilled. Now, you got to check with your CPA because once again, certain types of businesses that are C corporations don't qualify. For instance, if you're in the personal service business, like doctors, lawyers, accountants like me, we can't get that kind of stock because they don't like us. Now, those are the 9 things I wanted to share with you today. Now, is this everything in this bill? No. This bill is 1,000 pages. Do you think I read all 1,000 pages? No, I didn't. I read about 100 pages so I could share this with you, and then I'm going to take a class that's 2 days long to learn about the other 900 pages. If there's anything I missed or anything new I need to tell you, I will come and make another video and let you know. I hope you really enjoyed this video, and if you did and you like me, you know what to do. Peace.